Everyone, welcome back yet again to the YouTube channel. Just a couple housekeeping things before we get started with today's guest. So, of course, as always, we ask that our viewers please like, share, and subscribe here to the YouTube channel. Stephen Hughes, Hardship Real Estate Pro, and of course, if you can, be sure to check out harshiprealestate.com. We do have, of course, the description of our services and a blog. Additionally, our sister company, Ogden Layton Estate Sales, has its own website and blog. Now, today's guest is Mark Hammond, who is a reverse mortgage specialist. I'm going to pull up his website here, Legend Financial Services. Mark's been a mortgage broker since 1994. He did get his start in the mortgage world working for one of those big name banks that you all have seen and heard of. But Mark's story is really unique for the fact that he saw that what these banks were doing to his clients at the time and really in the years since was not fair in terms of the best rates for them or having accountability to the mortgage broker and really just flat out good customer service. Of course, you can look at all that on Mark's website, and he's going to talk with us today. I also invite you to check out his YouTube channel. From what I have seen, Mark has been the longest reverse mortgage specialist who has really put himself out there as a reverse mortgage specialist in our state. There's a lot of uh, lenders and brokers right now trying to break into it, but they don't have the number of years of experiences. They haven't seen the changes that reverse mortgages have gone through, nor have they done the number of transactions like many people have done. Of course, if you're a Facebook junkie, you can jump over to Legend Financial Services here on Facebook, give him a like there. And then, of course, he's also on LinkedIn. So that hopefully will help the algorithm gods a little bit for you also. Why don't you go ahead and tell us a little bit more about yourself and Legend Financial?
Sure. Sure. Yeah. Legend Financial Services is my company. I started in 2003. I did work for a big bank before that for a few years. And before that, I worked as a broker for 6 years. So I started as a broker, got recruited by a big bank to head up a mortgage division for them in Utah. Their processing was not even done in the state of Utah. They had a lot of red tape to get through to get loans closed. It was a difficult place to work. I kept getting beat by brokers on the rate and we couldn't even close fast. So it was double the trouble. So I asked my regional manager, why do brokers have such better rates than we do? And he said, if we had the best rates, we wouldn't need you. And I was like, okay, so what am I here for? To sell the highest rates I can to my customers that are my family and friends. And so that was the beginning of my exit from there and started Legend Financial Services in 2003. At the time, I was doing investments and insurance as well as mortgages. I had it kind of, that's why it's called Legend Financial Services, but I did that for several years. So I understand the financial services side of things, insurance, investments, but mortgage is really where I shine. I stopped doing that about 2006 or so, and I am just focused on mortgages ever since. And around 2007, 2008, I started getting into reverse mortgages. I really like the concept, how seniors can get a break from making a payment and just let their equity do it. They built up all this equity, they can let the equity make the payment and then they can pay it, later on. It's a lot more fun to pay back a loan when you're dead. so, so just wait. So that's been my focus ever since and specializing in reverse mortgages. Yeah, there's been some changes in reverse mortgages for the better over the years. They are still kind of misunderstood, in the
Yeah.
industry, in the general public. And some people still have mixed feelings about them. I have some videos that I produced called Reverse Mortgage Exposed, where I try to dive in on all of those issues that people might have with reverse mortgages or things that they might have heard or whatever, and talk about all that stuff, get it all out there so people understand. And that's the first thing I have people watch before we even meet, just so they get all of those misconceptions out of their mind and get past them. It's just a simple contract. You agree to live in the home, pay your taxes and insurance, and just generally maintain the home. In exchange, the lender agrees to not require you to pay any interest as long as you're doing those three things. So it's a simple thing. The interest just adds up. The equity covers it. They lend us, if the value's up here, they lend somewhere in the between 25 and 50%, of that value. So they don't lend a huge amount of it because there has to be room for that loan to grow because you're not making any payments. So there has to be room in that equity to be able to cover that. And then when people permanently move out of the home or when both borrowers die, then the loan needs to be paid back. They give them 6 months to a year to get a good price for the home if they're going to sell it, or the kids can keep it and pay off the reverse mortgage with a new loan that they get. So there's no reason to feel like you're going to lose your home or anything. It's actually a way to not lose your home because if you're not having to make a payment anymore, it's a lot easier to keep your home. All you got to do is pay the taxes and insurance.
Yeah, and we've had a couple people on the channel who do reverses, and we've talked a lot about kind of just the general way these, as what we're trying to call them now, HECMs, right? The home equity conversion mortgages, the benefits of them. I know before our call we talked a little bit about maybe talking about using a reverse mortgage or HECM during a divorce. And I don't know if they've talked about this on the channel, but it's funny. I just read a book even that quoted this study. About 25% of all divorces now within the United States are people who are over the age of 65.
Oh, wow. No,
Interesting.
that doesn't surprise me.
Since the 1990s, every year the number of divorces has gone down. It's because people in these younger age brackets aren't getting married. That's the bigger reason. Cohabitate. But the range from 55 to 65 has more than doubled, almost tripled since the 1990s, and 65 over has doubled. So there's just kind of this trajectory in divorce where, it's shifting to the baby boomer generation.
Yeah.
And the thing is, everyone knows, I'm sure you do through the financial services, that divorce is a huge it's a financial loss for everyone involved.
Killer.
It
Yeah.
it and that's the thing, it's like, I've seen it where you get these people in their 60s, they've been married 30, 40 years, and then they're gonna try to get divorced, and they've only got the one house, and now it's like what they're gonna rent when they're 65. I think this is where the heckam with divorces for these people makes so much sense, and I wish more family law attorneys knew about it. And I don't think people are really as aware of it, so that's why I wanted to focus on it a good bit, because 'cause we're just seeing such a shift.
Hmm. I mean, I'm 55. I can tell you from personal experience that over the last 5 years or so, my hormones have started to change. My wife's hormones have started to change. And that kind of took us by surprise. It kind of changed us into different people because we have different chemicals going on in our bodies. And that's something that people need to address is the hormone changes and my wife and I have been having trouble because of it, and she went on hormone therapy. I'm about to go on hormone therapy. It's a very misunderstood thing. It has nothing to do with what we're talking about here, but I think for viewers that are interested in this concept, that is something that is a big deal that causes these divorces is those hormone changes. And that stuff can be addressed. But
I
if it
think
can't,
I'd
mhm,
rather see them work it out and
yeah,
stay
yeah,
every time.
yeah.
And I don't, just in case we get comments, like, I know every situation is different, and the abuse, safety, blah, 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 blah. But in general, I would rather see people work it out.
Yeah, of course, yeah. We don't want to have to do that, but and it's obviously more difficult for us, to deal with a situation like that than it is to deal with a happy couple that wants to get more money out of their home so they can vacation together. That's obviously more fun for us. But
Right.
if it's not, then there's ways of the reverse mortgage can be an excellent tool for dividing up the equity and providing income for the person that stays in the home. I mean, obviously, one person's going to leave the home and the other person's going to stay, or they could sell the home and take the proceeds and each buy a smaller home and use the reverse mortgage proceeds as the down payment. So you can buy a home with a reverse mortgage as well as do a refinance and get money out. So let's just say that if a divorced couple was going to get a reverse mortgage, the person that stays in the home would be able to do a loan, and let's say they could borrow 40% of the value of the home. Let's say the home is worth $1 million, so they could borrow 400,000. If that home was paid off, then the person that stayed in the home could get 200,000. They could put it in the bank, can spend it on whatever they want. They can do that. The other spouse that moved out could take the other 200,000, put it down on another home and use that as a down payment, and then get a reverse mortgage for the rest. So each of them could end up with two houses and no payments. So just like they were before, obviously, but they could get two houses and for a lower value and still make that. That's one way of looking at it.
I mean, they're going to downsize anyways
Yep.
because they've got to get rid of stuff when they're moving. They're not sharing a household anymore. So it makes sense that they would move down to a lower price bracket in terms of a replacement home. So that's again where like this really lines up well for them. It talks about divorce. There's like three I've read. This one's been the most approachable one, and it's like super cheap. It's only like $6 really.
Hmm.
Hoping to get this guy on the channel at some point, but it's not a lot of fluff, but then it's not super technical. It's again very general and pretty realistic. So I thought I'd just mention that real quick in case anyone cared. But I think one question people might have on the HECM and divorce is obviously I have seen this where people still owe a lot on property, right? What is, and we've probably gone over this in other videos, but I always have to be reminded how much equity do they need in the home to make something like this work?
Well, before the rates went up really high, it was 50 or 60. Uh, you know, fi- you needed about 50 to 60% equity in the home
Okay.
to do it. With the interest rates being higher, of course, when you have higher interest rates on a balance that's being increasing every month because the interest is being added on, that balance is going to go up a lot faster if the rates are high, right? So that's caused the reverse mortgage industry to have to reduce the amount that they lend on the home because they have to maintain a big buffer between the value of the home and what is owed. They have to have room for that thing to grow without it being more than what the house is worth. So,
Right. Right. They have to, of course, not just the interest rates, but they have to assume the market's softening. So
mhm,
that's the thing they have to assume. So let's say like median price for the three counties I service,
mhm.
it's like 580. So maybe we can use that number as an example because I feel like it's a general number, but that's also pretty realistic for a lot of people. And, let's say they have 70% equity. What is someone able to do with that?
Okay, so that would mean that they owe 174,000 based on that 580 price. They would need to, the reverse mortgage would need to be enough to pay that off plus the closing costs. And reverse mortgages are based on age and they're based on the value of the home. So the older you are, the more you're going to get. Let's just say you have a 75-year-old, and I would need to run the numbers to tell you the exact number, but let's just say that came out to 200,000, then that they could borrow. That would be enough to, pay off the loan plus get a little bit of cash. And the cash can come just right to them at closing. They can take it with them or they can leave it in a line of credit and they don't have to accrue interest on it if they don't take it out. And these reverses can have the rest of the money can be in a line of credit. They can draw on it in the future when they need it if they don't need it right now. Same if they didn't owe anything, they could get that whole 200,000 in a line of credit and just sit on it till they needed it. No interest would be accruing on it until they actually took it.
I think this is kind of a follow-up question, kind of in the line of the divorce stuff. Let's say you took a sum to give to a party that's moving out. How much do they have to put down on a house? Like, say they only had $100,000. What price point are they?
Oh, yeah. So let's use that same example. if they were getting that 200,000 based on a 580 price on the home that they currently have, if you said 100,000,
Yeah, for like the departing spouse, right?
well, yeah, so they would split the 200,000
Right.
if they were getting divorced. So
Right.
then they would have 100, right? So that they could buy about a $285,000 house with that 100,000.
Yeah, which honestly, some of these people are gonna be moving to, like, condos or small homes, and in my area, seriously, up in Ogden, people are like, "Oh, 285 Ogden, Weaver, there's options even at that price range."
Mhm. Actually, that was wrong. It's only 153,000 because based on that other example, if they were to be able to get 35% that they could borrow against the property, then the maximum amount the property could be worth is about 150.
Gotcha.
They're really likely to be able to do anything unless you get a condo, you know?
It maybe if the whole home was paid off, then,
Yeah,
you know, it's an option, which there's plenty of people that do have it paid off completely within that demographic. I guess we were just showing like, yeah, so you do need to have a lot of equity in the home to kind of make it work, which is realistic. We want to be realistic with people on
yep.
this, you know.
Yeah, that's changing as the rates are going down. The
Yeah.
the the amount that people are able to borrow is going up now. So hopefully it gets back soon to where it used to be where you only needed about, 35% equity or 40% equity. So now you need more like
In regards to the heckums with divorce, I mean, have you seen it increase? I mean, like I said, I've seen it being advertised more. And I see the divorce numbers going up, but does it come across in your business, or have you seen an increase of it in your business?
too much. No, I haven't seen a lot of divorce with these. A lot of the people that people go to when these things happen aren't very versed in reverse mortgages. So,
Right.
their attorneys or their financial planners, a lot of them are very knowledgeable about reverse mortgages. And so they don't even know to refer to this product to help. So,
Do you have any other thoughts on heckums during divorce or heckums in general before we wrap up?
one thing that's cool about reverse mortgages is they don't have any seasoning. So, if someone were to step into one of their kids' houses, for example, let's say that one of their kids had a house that had a lot of equity and the grandma wanted to move into there after the divorce. um, Grandma could do a reverse mortgage on that house. Um, so there's no seasoning in how long that she would have to live there. She could do it from day one. They put her on title and she could do a reverse mortgage on that. That could maybe pay off the loan for the kids that are living in there. Then no one would have a payment until grandma died or permanently moved. That may work for some people. I don't know.
Well, everyone's circumstances are different. So again, it's just having these options is great. Um, Mark, we kind of showed everywhere to find you online, but just again for the algorithm guides, if you could maybe tell us the best phone number to call and email, just so it's also there in the transcript.
Yeah, sure. It's 801-808 Mark, MARK. So 808-6275. And my email is Mark, MARK at legendfinancial.com. Best way to get me.
Thank you. And thank you for coming on the channel. And for those of you who have watched, please feel free to like, share, subscribe. It does help our channel. It helps us to inform the public because a lot of this is educational. Please check out our websites and blogs as well. Mark, thanks so much for being here, and we'll see everyone next time. Bye.
Thanks, Stephen.